And now I'm going to talk to you guys about the common mistakes that people make out of fear. So the common mistakes that people make is tightening their stop losses prematurely. And this just results in getting stopped out too early. Like here, if you did what I said, bring your stop loss down, 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 you'd have gotten stopped out. This would have been a winning trade that would have hit your take profit. So you don't want to move your stop loss too early when the trade could have moved in your favor. I've seen it so many times. My students like, oh, my original stop loss wouldn't have gotten hit. And then they keep making the mistake every single time. Don't move your stop loss prematurely. You only have 3 ways you exit a trade: stop loss, take profit, and if you predetermined it in your plan, exit. I would feel like those are the only reasons that make sense based on a strategy. You guys don't want to do anything based on emotions. So what you guys can do is look for technical reasons to be exiting your trade. So at least you're not trading out of emotions. There will be a valid reason to exit the trade. The next thing that traders do is, like, for example, on Friday, I was fearful to lose profits. At the end of the day, like, it kind of worked out in my favor because I went half size on Netflix and I did take a losing trade. So it kind of maximized my returns for the month. But maybe if I had this fear, I shouldn't have traded at all. But at the end of the day, a mistake for trading out of fear is reducing your position size. And this is not something that you want to make a habit out of. There's a specific reason why I reduced my position size on Friday, which was I kind of did want to trade, but I already made all the profits that I wanted to make for the month. So I reduced my position size just to get in more reps. However, if you guys are randomly increasing your position size, reducing your position size every single day or every single week, that's not going to work. And this is going to be bad for you. You're going to reduce your size on a winning trade. You're going to increase it on a losing trade. And then your risk reward is going to be completely skewed. So managing your risk is important, but reducing your position size out of fear limits your potential profits. And if we're always sticking to like a 1-to-3 risk reward ratio, what good does it do for you to take a 1-to-3, let's say on $1,000 position size, you lost, or like a $4,000 position size, you lost 1,000 to make 3,000. And then the next day, that day, let's say you lost 1,000. Then the next day you're fearful and you feel like, oh no, I don't know what to do now. The next day you have $1,000 position size and you risk 300 to make 1,000, let's just say. And in that trade, you made 1,000. So what did you do for yourself? You just made yourself a break-even trader by reducing your position size randomly. So you don't want to do that. You need to have a predefined position size. And for me, what I recommend for you guys is, do you always use the same position size for every trade? Kind of, I do. Similar position sizes. And it ranges because of contract prices, but mentally I try to keep them around the same. I've been focusing on contract sizes for my positions, and that worked really good. Like last year, whenever I was trading SPY every day, I was just trading SPY every day. So I was just focusing on contract sizes. But nowadays, since I'm trading some different stocks, there's different prices for the options. And when I'm focused on contract sizes, it kind of differs on the actual cost of the trade. So I do stick to the same position size for every trade, but the cost of it varies. Anthony said, do you believe it's better long-term to grow a big account and take big position sizes, or have a smaller account, keep most of your money in your bank account and focus on flipping that? I think it's better for long-term to have a less amount in your account and to focus on a systematic position sizing system, because if you can't manage a small account, you definitely won't be able to manage a big account. So you want to make sure you could manage a small account first. So this is the position sizing technique that I recommend for my students to size their positions. So if you're a beginner with your first month trading, no matter how much money you have, I usually suggest to trade with 1 contract. And if you end your first month trading, for your first month trading, take every single trade with 1 contract. This is what I recommend. And that's just to prove to yourself that you can actually be consistently profitable at trading before you put any more money on the line. And then if you're profitable for that first month, then the next month you could go with 2 contracts. And if you're profitable for that next month, then you could go with 3 contracts or something like that. Very systematic. So usually I recommend stick to the same position size for the full month. That's what I recommend. Be profitable first before going any higher in your position size. And as well, if you're profitable first before you go higher in your position size and you do that for a full month, you can just keep your profits in that account and then raise your position size, and you won't ever need to deposit money into your account. You could just trade with your own profits, and you could also withdraw profits as well. And at some point you'll only be trading with the market's money. So that would be a goal. You guys could read this more in depth in position sizing. This is the technique that I recommend. For me, nowadays, I'm not sizing up every month anymore. I used to. Now it's more like quarterly or half a year that I'll be sizing up. And then the next mistake that is fear driven is just avoiding trades and not taking the trades. This is the worst mistake that you can make as well. Fear leads to a lot of missed opportunities. So you want to trust your analysis and take trades that meet your criteria. So at the end of the day, we could go back to like the same Netflix example. And I wonder if I wrote something about this so there was trades that I missed because of fear. So it sucks. And the same example here is Netflix. You remember this day where I took the losing trade and then the winning trade? Then I decided, hey, I'm not trading in the balance range anymore. And it was paralyzing. There was 6 profitable opportunities that came day after day inside of this balance range on Netflix, and I only capitalized on like 2 of them. So the fear of taking a losing trade, because I was expecting a breakout, but there was really no proof of that. Just for like the full week, I was expecting a breakout, and it was following the supply and demand strategy so good. But since I felt like, hey, it already bounced the demand zone, it already rejected its supply zone, I thought, hey, now we're imminent for a breakout. And I had a fear that we would break out while I'm taking the reversal trade. So I missed a lot of trades, and this would have been super, super profitable if I actually did take the trades. I don't know if I took this one. I took this one. I definitely missed this one because that one's like an overnight. And I think I missed this one, and I missed this opportunity. I missed this opportunity. I definitely missed this opportunity. And it was just going from demand zone to supply zone, demand zone to supply zone, demand zone to supply zone. And I missed a lot of opportunities. So this is a bad habit to have. You need to follow your plan and not let fear paralyze you. So these are really the most common fear-driven mistakes. So here you can see there's some do's and don'ts of over managing your trades. So instead, you could just place your stop loss, place your take profit, make sure it aligns with your strategy. Before you enter the trade, determine, is this the trade I want to take? Yes, this is where my stop loss is, this is where my take profit is. Don't do anything else in between. Everything in between that is noise. So for Netflix, there would have only been like 2 losing trades if you followed the strategy. So I gotta search it up again. There would have been only 2 losing trades if you followed the strategy. This one and this one. Because it could have been like, you could have gotten stopped out on those for sure. If you didn't time your trades, if you just had limit orders. Here, there was no sign of selling. So if you're watching the stock and you don't have like a buy limit order there, you most likely would not have taken a loss because there's no sign of something. This is a 5-minute time frame. You would have had no confirmation at this point. So here's where you would have had your confirmation. You would not have gone stopped out. And then here, like potentially you could have gone stopped out because it was really volatile there. So you could have gone stopped out there. Regardless of that though, every other opportunity within this balance range was a winning opportunity. So definitely with a 1-to-3 risk reward ratio as well, you should just follow your plan every single day and you would have been super green just off of a balanced range.